I've been a part of startups, and I've been a part of large corporations, big companies. And the vibe at those different those places are completely different. A lot of the times, if you're lucky enough to be in a successful startup environment, it's about growth. Sometimes you're just duct taping shit together in the back end just to make sure you can service customers out the front end, and you can kind of figure out how to create efficiency later. And in larger companies, that's not always the case. You can be in some instances where you're just figuring out, okay, we've got 7 products. How do we cut some of these and get them down to 3? In other words, you're looking to find growth through efficiencies, not through building things. I'm sort of curious how you see, I don't want to go super Trump and Elon or whatever, but I'm sort of just curious as an abstract level, how you see what's happening with the U.S. government today. Do you see it as sort of moving from a waterfall organization or a large company to something that's trying to be more like a startup, that's trying to be more agile, that's trying to iterate more often, create more change? And is that, I don't want to ask you, is it a good thing? Because I know what you're going to say, but how do you feel about the change in the pace of change in government? Because you have always been somebody who adopts a high pace of change. And it seems like right now we're in an environment where governments are delivering a high pace of change. And I'm curious if you keep the same opinion towards a pace of change in government as you do towards just business and everyday life and technology. And if there's a difference, why?
It's a very interesting question. I will give you a lot of kudos for putting together just a very thoughtful question. First of all, I don't think we're ever going to consider the U.S. government. I don't think you can ever compare the U.S. government to a startup. I don't think that's fair because I mean there couldn't be anything.
Compare it to IBM, and IBM.
There couldn't be anything. We couldn't be any further from those two being anything similar. You know, the U.S. government, any kind of startup. So that part of it, I don't think is necessarily fair. When you talk about the pace of change is very different for corporations than it is for governments, because pace of change for corporations has consequences. It also has certain rewards. And so that's what a public marketplace is. If you like the pace of change for a certain corporation, then you buy that corporation. And if you don't, then you sell it, and the results will reflect in the stock price. For government, it's very different. You don't have that you don't have those choices, that optionality. You don't have that. They don't pay for their mistakes, and they don't get the wins on the other side. So the pace of change for government is very different. The pace of change for government is a combination of PR. It's a combination of coattails. There's a lot of other stuff involved. It's not the same thing. I think when you talk about the pace of change on a government level, it really depends on what they're doing. So if you asked me, if you said a general question to me, would you prefer a faster pace of change than a slower one? My answer would be absolutely, for corporations and for government. My answer would be yes. If you ask me, does what they actually change matter? I would say yes. For corporations, yes, because it'll be reflected in the stock price. For governments, it matters, but it's more reflected by approval than it is in anything else, because the immediate returns are not seen. So I think when you think about what's happening now on a government level, if you like this pace of change, then you have to support these policies. Like, I'm not going to support the pace of change for policies that I do not agree with. So for me, the current pace of change, I'm not impressed, nor do I like it. But if it was a company, I could sell it. Since it's a government, I can't. So I think that's the challenge, Victor. I mean, I think you're comparing apples and oranges rather than comparing apples to apples. That's all it is. So I'm not saying it's a bad thing for certain people, because some people love this pace of change. They think, hey, this gets us to where this gets the ideology we want, this gets the platform we want, this gets us here faster, and therefore they're going to be happy with it. There's other people that don't like that. But in corporations, you can buy and sell that company. In government, you can't really. And so it's a very different motives, I think. And anyway, that's where I'm at.
No, I actually, Victor, I was really surprised by his answer. I actually love your answer, and it's a monumental shift for you. It is I mean it. It's a monumental shift for you, which means I thought it was going to be more like a water on a rock type environment for you, and it's more like shifting sands. I think you're open to a lot. I think you actually backhandedly like what's going on. Victor, great job out of you.
That is not what I said at all, but thank you for trying to put words in my mouth.
It is exactly how I heard it.
Well, you could hear whatever your demented little mind wants to hear, but that is not how my mind works.
You are more like sand shifting, Sosnoff, not like water on a rock. I thought you would really dig your heels in. Why
would I dig my heels in?
I am proud of you.
I don't dig my heels in.
Not only that.
Go ahead.
Not only that, you gave props on the question. I thought for sure, as soon as you said that was a great question, that the counter punch was coming right behind that setup.
I
know. But I agree that it's a comparison of apples to oranges. I 100% agree. But it came from something else I was doing, which was dealing with the innovator's dilemma. This idea that a corporation at some point can get so big and dominate so much of the market share that it becomes difficult. They lose market share to upstarts because they can't be aware of certain aspects of their market share. And so I was sort of curious how you thought about that comparison of the innovator's dilemma. Has the empire grown so big that now we've got challenges either economically like China or militarily like, I don't know, name 5 to 10 countries offhand? And if we're at a point looking at a corporation, you reach some point where you say, I must be a disruptive innovator. I think you've been at points at points in the past where you've said, I'm going to disrupt myself. And I wonder whether you agree with the policies or not, whether at some level Tom Sosnoff believes we've reached in the empire a point where we need to disrupt ourselves. And whether you agree with the direction or not, the sense of urgency to reform, the sense of urgency for a greater pace of change from government, whether or not you felt that sense of urgency, or you felt that whether or not you agree with these policies, we shouldn't be moving this quickly. That was sort of the genesis of the question.
I understand that. I don't think there's a person in the world that doesn't appreciate a faster pace of change. It really depends. You can't just broadly generalize like that, though.
I'm with you. You and I are the opposite. I want a faster pace of change from government and a slower pace of change from reality and technology, and you want a faster pace of change from reality and technology and a slower pace of change from government. We're on the opposite end of the spectrum. By the way, E-mini S&P down 4/5% now.
You are right. NASDAQ down 1%, Russell down 1%, and the Dow flirting with down 1%.
There's nothing I've ever heard worse than a quote from, like, that sounds like it's WCBS radio or like Bloomberg.
We went a little too far, Vic. We tried.
Bro, I can't believe you're still quoting that change. Is that just me?
No, I like that change.
First of all, when the market gets to what Preston does, what TP does is the pinnacle. He quotes in standard deviation. That's the pinnacle. When the market gets there, we're done.
That's just
in a good way.
By the way, if you quote stuff in standard deviation, you're just showing off. Like, that's all that is. He's just showing off. He's just showing off. I used to have a risk manager years ago that would quote in standard deviations, and it would drive me out of my mind. Like, Tom, your positions at 1 standard deviation, it's all right, but at 2 standard deviations and at 1.68 standard deviations, like I was like, you got to give me numbers, dude. I'm not gonna like go back and try to figure out where 1.5 standard deviations is on my, on my risk graph.
Bro, that's so much better.
Oh my God.
You don't have to do any conversions. He gave you your risk. Like, how do you not love that? I wish everything was quoted in standard deviations, even height.
So I'll tell you a funny story.
How tall are you? I'm I'm plus 0.25 standard deviation above the mean.
I'll tell you a funny story. So this guy that used to be on my risk, he used to manage my risk when we were clearing through First Stop, which is now Goldman Sachs. And he was there for, I don't know, a while, I guess. I didn't know how old he was or anything like that. I didn't really know him personally. He would just always call us up. We had one special phone line for risk. And so, we left, went out and built Thinkorswim, then Tasty and blah, blah, blah. This kid we back, he's a prop trader and he's at a different clearing firm now. He calls me up and he goes, "Hey, Tom, I can't believe this guy that manages our risk and our portfolio is bugging me about 3 standard deviations away." And I go, and he gives me his name. It's the same guy. Okay. This is literally 35 years later. I go, "You got to be kidding me. That guy's still doing risk?" He's like, "Yup." He goes, I never met him, but he's like, he's my risk guy. I go, "He was my risk guy like 35 years ago." He's like, "Can't be the same guy." I'm like, "That is the same guy. He's still quoting you in standard deviations. It's the same guy."
Hang up the phone.
I go,
Tony,
"Run."
I
go, "Do what we do." We had a separate color phone, and we never picked that one up when they called.
All I want to know, Tom, from Tony and I, and probably a lot of the viewers, I have one question for you to close out the segment. What are you going to do with your Doge dividend?
Tom's not going to take it. Tom's not going to take it. He's going to boycott it. He's going to boycott it, right?
Doge dividend. I'm going.
What are you doing with it, man? What are you going to buy some more berets or something with it? What are you going to do?
We don't even have berets in the merchandise store. What kind of fakak is that?
That's not our fault. They don't have them.
Oh.
We have a new store, Victor. You can spend all your money in the new Tasty store with your Doge rebate. I'm
gonna buy berets.
That's actually a pretty good ad. You should make a commercial and run it on the network for that. That'd be pretty funny.
We'll figure out something. I mean, I have to find time.
All right. I'm going to use mine to buy you some gold sneakers. Some gold sneakers and some meme coins. All right, gentlemen.
You're a good man.
I'm going to use mine to offset my loss on my Tesla for my new Lucid.